Hello everyone and welcome back to my channel. So I have my friend Jasmine here. Hey Jasmine.
Hi! A lot of your viewers may already have seen a couple of my videos and or be in our VIPKid Facebook group that's called VIPKid All About Taxes. If not, my name is Jasmine. I'm the founder of Momen Tax Services here in Southern California. I have a VIPKid tax group that I share a lot of good information and just kind of help answer questions for people in the group. And a lot of them want to know how to become a client. A lot of them want to know how to do taxes on TurboTax. A lot of them want to know just questions about EIDL and PPP. I try to help however I can, wherever I can.
Do I have to pay quarterly estimated taxes?
This one will surely depend on your circumstances, but very general rule of thumb regarding self-employment taxes is if you expect to owe the IRS more than $1,000 at the time that you file your annual taxes at the end of the year, that means you have a quarterly tax filing requirement for the year proceeding ahead. A lot of the times when I say that, most people are like, well, why, how, who, where? And the best example I could give is think about when you work for a company and you have a W-2 job. And let's just use Walmart as an example. If I work for Walmart and I get paid every 2 weeks, there's 3 types of taxes that are generally withheld out of my W-2 or out of my paycheck that result in a W-2 at the end of the year with Walmart. There is income taxes, Social Security taxes, and Medicare taxes. The Social Security and Medicare taxes combined are referred to as FICA taxes, which equate to 15.3% in taxes. When you work for Walmart, Walmart is responsible for paying half of that tax for you. So they pay 7.6%, you pay 7.6%. The 7.6% that you're responsible for paying gets withheld out of your paychecks, which is the Social Security and Medicare taxes you see withheld each time, and then they match it. If Walmart has 500,000 employees and they are keeping 7.6% from their employees and they have a responsibility to match that 7.6% for their employees, they would be sitting on a lot of the IRS's money if they were not sending that money to the IRS either on a monthly or quarterly basis.
Right.
So consider us to be our own Walmart. When you're self-employed, not only do you not have someone matching the taxes for you, that 7.6%, but you also don't have someone withholding it and remitting it, meaning sending it to the IRS for you. So that becomes your responsibility. The IRS considers you not paying quarterly taxes as borrowing their money interest-free, which definitely they're not a fan of.
Right.
That's why they say, if you're gonna owe us more than $1,000 at the end of the year, then you have the requirement or obligation to pay us our money on a timely basis. So at a minimum, you know you're gonna have 15.3% because that's the Social Security and Medicare taxes, namely FICA taxes. Additionally, you have income taxes, which really just depends on what tax bracket you fall into, which could be dependent on if you're single, if you're head of household, if you're married, those kinds of things. So at a minimum, the smallest tax bracket or the lowest tax bracket that you could fall into is 10%. So you know at a minimum, you have 10% in income taxes and at a minimum 15.3% in self-employment taxes, making the minimum 25.3% of the net amount of money that you make.
Is there a penalty if I file yearly and owe more than $1,000?
Yes.
Yeah.
So the first year there won't be more than, and this part of it, honest to God, you guys, everything with the IRS is always varying and sometimes things happen, sometimes things don't happen.
Right.
But definitely this year because of COVID, I can tell you I've seen the same situation for 3 or 4 of my clients that have been clients for years, and I've gotten different responses and different answers for all of them. The true genuine answer is yes, because it's a requirement. So definitely if they make it a requirement and you don't do it, surely there's penalties, but the penalties are super minimal in most cases. The penalties are relevant to and related to how much you ultimately owe. Like surely someone who ends up owing $1,200 isn't going to be penalized the same way as someone who owes $50,000 at the end of the year. And I see both. I literally see both. Most of the penalty is calculated within the tax return and in the software as you do it, depending on how much you ultimately owe. Right. It'll have you put in your prior year tax liability, and based on your prior year tax liability, it'll calculate how much your penalty is. There are multiple kinds of penalties. There's like failure to file penalty, failure to pay penalty, failure to this penalty, failure to that penalty. So in addition to the little small penalty that gets calculated based on how much you ultimately owe, there's sometimes another letter that comes in the mail from the IRS, and it will have like a $175 penalty or a $275 penalty. That usually only happens when you filed more than 1 year of not paying self-employment taxes, more than 1 year of self-employment taxes without paying quarterly self-employment taxes. You always have a one-time penalty abatement waiver with the IRS. So at any time that you get a fee with the IRS related to failure to file, failure to pay, although the interest on the money that you owe can never be waived, and the interest will always be due as of the date that money should have been paid, the failure to pay penalty can be waived one time as a courtesy every 3 years. But I guess one thing to consider for estimated quarterly taxes is a lot of people say like, oh, I didn't pay it and I didn't get fined, or I didn't pay it and it was perfectly fine. You don't have to do it either. Usually it's because those people have another W-2 job on their tax return as well, or maybe their spouse is not self-employed. So the taxes that are paid on their spouse's W-2 covers the taxes that they might have due on this line of self-employment. But every tax return is different.
What if I didn't get a 1099 NEC from the company I work for?
Not getting a 1099 does not exempt you from filing taxes. You still have to file taxes, because the self-employment filing threshold, basically the amount of money that you have to make before you have to file self-employment taxes, is $400 total income. So if you work a small part-time job at Walmart and you also do VIPKid on the side and you make $300 with VIPKid, you still have to file and report your VIPKid $300 because your overall income is more than just the $400 threshold of self-employment income. But if you only worked VIPKid or any other self-employment gig and you only made less than $400, then no, you don't have a tax filing requirement. And to specifically answer your question about the 1099, you will only get a 1099 if that company that you work with pays you more than $600. If you work for VIPKid and you don't make more than $600 in one calendar year that you were paid, you will not be getting a 1099. So if you made between $400 and $600, you would be putting that income on your tax return on a Schedule C the same way you would if you had a 1099, but maybe you would be listing it as the other income section within a Schedule C for not having a 1099. And if you made less than $400 and it's all you made total the whole year with no other income at all, then you just don't even have a filing requirement period.
What if I work for multiple teaching companies?
You don't need a different Schedule C. And if someone's next question is, what is the Schedule C? The Schedule C is the form that would be within the tax return, which is namely the income and expense sheet, where you report your self-employment income and expenses. As long as all of the income you're including on the same Schedule C is for the same type of business activity, it can go on the same Schedule C. So you can combine your VIPKid teaching with your Go-Go Kid, with your Zebra English, with all the same activity, with your tutoring. All of that would be okay because it will have the same code. I think it's the NACIS code. It'll have the same code, so it would make sense to put it on the same Schedule C. But if you have like a crafting business, or you have an Etsy store, or you drive for Uber and you're getting 1099s from all these different places, or you're not getting 1099s, you're just earning revenue from those places, you would not be combining those with the Schedule C for VIPKid. Those would have separate schedules.
How do I determine my write-offs for my business?
I would 100% say to think of the bigger picture when you're considering write-offs. I think we all agree that it takes money to make money. So when you're thinking of your write-offs, genuinely think about how much and what kind and where you have to spend money in order to be able to make this money that you're making. For like online teachers, for example, you gotta have headphones, you gotta have a computer, you gotta have a chair to sit on, you gotta have a desk to have your computer on, you gotta have electricity, internet. You need to have a phone in order to do any kind of business. Fill out the application and be able to have the company call you or be contacted or be on the app and check your schedule and open your bookings and close your bookings. So really think about all the things you have to do day to day in your business to be able to produce and generate this money. Definitely, I would say related to expenses. I mean, you're an online teacher, so you're on a computer. Keep a spreadsheet all day. All day. I don't think any of us are really not on a computer, whether we're a teacher or not. Right. But I would definitely suggest keeping some kind of spreadsheet and just keep track of the things that you even think are relevant. Mm-hmm. And then when it comes to doing your taxes at the end of the year, if you're working with an accountant, they surely should be able to say like this yes, this no, this yes, this a little bit, this percentage of it, this not at all, this all of it, Yeah. 100% think of the things that directly enable you to do your job. Right. And then there's also things that indirectly, like if you paint your house, surely the cost of the paint for your whole house wouldn't be a business write-off on your business taxes, right. But the cost of painting your specific office room would be. The PPP is the Paycheck Protection Program, very different from the EIDL. Sidebar, I have videos on both of these on my YouTube channel. The EIDL is the $1,000 grant program that everyone is referring to. And the $1,000 grant program is over. The money dried up for it. So there is no way as of today to go apply for that $1,000 grant. They are rolling out second rounds of this grant, but it's still not applicable for people who are going to apply as a first round. The second part of that funding that's now a lot of people are talking about in the last 2 to 3 days, they've been getting emails about, that is the advanced targeted grant. And that means if you applied the first round, if you are in a low income area, and if being in a low income area, you can show a 30% loss in revenue, not net profit income, in revenue in your business, then you would be eligible to receive the remaining up to $10,000 that they were advertising the first round. So the first round, they were like, hey, everybody's gonna get $10,000. And that was like not gonna work because there wasn't enough money for that. So they were like, okay, just kidding, we spoke too soon. Everyone's gonna get $1,000 per employee. Everyone who included themselves in the first round of the EIDL would be contacted by the SBA if they fit the low income economic area threshold. You have to respond back being able to show a 30% loss in your business, and only then would you be able to recover the rest between $1,000 to $10,000 total amount that they were going to give you. So if you already got $1,000, technically they're saying you can get up to another $9,000, and that squares away the EIDL. PPP, there was a first round and a second round. If you did not get it the first round, then while you're going through the application, you would just select that this is the first time that you're applying for PPP, and you would go through, and it's like it literally shouldn't take you more than 3 to 5 minutes to do it, and I have a video on it. If you already got the PPP the first round and you're applying for the PPP the second time now, and it's available to do it, that one is still available to apply as a second time. Even if you got it the first time, or even if you didn't get it the first time, it doesn't matter. You're still eligible to apply for the PPP. For that one, if it's your second time getting it, then you need to show a 25% reduction in gross revenue from any quarter in 2020 to the same quarter in 2019. And it comes out as a loan, but as long as you spend it the way the forgiveness qualifications require you to, then you can submit a subsequent 2-minute application that you upload your subsequent documents showing, yes, I spent it XYZ the way you required me to, and then it's forgiven and it's great.
I am an American. How do I file for my yearly tax returns?
The I am an American part, I think, is the distinguishing factor separating how do I file my annual taxes as opposed to I'm an American, how do I file my taxes? And the reason why I say that is because there's a lot of Americans that live abroad. You know, like in my situation, for example, I work with like, I'd say over 150 VIPKid teachers nationally as clients. Yeah. And then I have clients in 18, maybe now 19 different countries as well that are American, of course. So they have a US tax filing requirement. I would definitely say that's the distinguishing factor in saying I'm an American, because they may be in the US and they may not be in the US.
Right.
If they're not in the US, then they're what we call an expat. There's different procedures for filing taxes as an expat. And there's also different, credits or deductions and things that apply to teachers that are expats. So the tax filing process, I would say, is the same. You're either doing it yourself or you're hiring an accountant or us to do it for you. Either way, you would still have the same tax filing requirements that we discussed earlier in the video about the less than 400, getting a 1099 over 600, all of that stuff. Same rules apply, but surely there would be additional forms and schedules that would be included to report and differentiate income that you earn from the US versus income that you earn from a foreign country that still needs to be reported on your US tax return, but then there is more additional paperwork to make sure that you're not double taxed if you already paid taxes to that foreign country for that income.
See you next